The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome, everybody, to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more into the breach, dear friends. Of course, we've got action in this market, off 29 points on the S&P cash, 2.3 billion shares as we start the show. And while volume's kind of good, you have to almost put a little asterisk behind it, kind of like home runs these days and steroids. And that is, I think to get out of this trading range we've been in for a while, we're probably going to need 4.2 to 4.5 billion shares on the New York Consolidated Tape by the end of the day. I'm thinking this says maybe 3.5. So, again, we are still, I think, trapped by gravity, trapped by maybe the belief that there'll always be somebody manipulating the markets like the Fed. In fact, today, we continue to open up with the dollar index, which has actually broken the 96.30 level that I've been watching for a while. I thought a great deal of what we'd been watching was nothing more than noise. And I kind of like the fact that it did break it, and it looked like it had some good movement in it, and now it's starting to come back. That 96.30 level on the continuous contract is kind of key to me anyway. 96.05 right now. It did break through it fairly quickly. Now maybe we're going to move back up there and have one more chance for this thing to actually go against it. But so far, kind of tough to figure out if there's anything in there at all. We've had a couple of rally attempts. We've gotten down to 2046. We've bounced a few times. I actually added a position today, and probably going to lose 20 cents on it. And I don't know what else you can say about it. Some of these things should be rallying and are not, and I'm not exactly sure what's going on out here. The dollar probably should have blown down another 50 cents. We should have had a lot of commodities start to rally, not just gold. So there's a lot of things that are going on out here. I don't know if it's expiration related, if there's some meaning in the market that hasn't come out yet that I haven't been able to grasp, other than a great deal of noise. But we'll have to see. Anyway, we'll explore this during the day, and we shall see. Anyway, what do we have? Oh, I forgot. I got to get that up and running so that we can do our history. How could I start my show without a little bit of history? Well, we have to go on and find some history.
That it's all just a little bit of history repeating.
The stock market finishes a week of shattering records right and left. In 1982 on this day, the Dow Jones Industrial Average soars 30.72 points on thunderous volume of 95.9 million shares, closing at 869.26, up $81.24 and points for the week, or a startling 10.3%. And of course, we all know what happened in 1982. Basically, we kind of pushed out the old way of doing things. I guess it was the Carter administration and their malaise speech pretty much put the whammy on anybody thinking the markets were going up anytime soon. Maybe a little optimism that came along in 1982, a little bit different tax policy, and a lot of people decided that it was time to shrug the malaise and move out into the markets and have one of the biggest moves in our economy ever in the history of the country. 4 out of 5 trading days are among the 10 busiest recorded on the New York Stock Exchange that week, and the Dow has its biggest and 4th biggest daily point moves yet on record still. So, and this day in an actually week in 1982. Everything comes around again eventually. But we have it. Anyway, after the bell tonight, Hewlett Packard is giving its last quarterly earnings as a big company, a behemoth. It will be splitting up before the next earnings call. And the question is, how much of the good stuff is in the new company and how much of the bad stuff did they shove into the other company? Normally, these splits are a good way to try to shove a bunch of things like costs, expenses, and everything else into one company and leave the other company to grow unencumbered, as it were. Anyway, that will be after the bell with some other stocks of interest tonight. But to me, that's it. And then John Deere in the morning. I think that's it for about news. Everything else pretty much overtaken by the movement in the markets. I'd been looking at the GLD, kind of scratching my head yesterday. We had two big down days with big volume in the GLD. If we go back to the 17th, had almost 15 million shares on that day as it closed lower. It gapped fairly significantly lower on the next day with 15.7 million shares. We've come back, kind of went sideways for about 4 or 5 days, filled that gap. The best day I think we had is what? 10 million shares. Actually popped up with 7 million shares yesterday. And I figured, well, that's probably all you're going to get. We got another day up here today, 6.1 million shares. So even if you use the least or lowest volume of those gap days down that we've gone through at 4.8 million shares, still kind of light against this. And that's probably what has me more scratching my head than anything else, that gold was able to run through all these, even though it had some fairly wicked volume down. And maybe that was the washout that I should have been looking for. But I would like to have seen a little bit more volume out here today than 6.1 million shares to give us an idea that we are off the bottom for good in gold. But since I have no axe to grind on this, it does not matter to me. I took a very tiny 20-cent option yesterday on the idea that maybe that was the top we'd pull back today. But I think that the dollar index moving is probably anybody needed to see. But keeping it rather light. Don't have a lot of positions out here in the newsletters. And we'll see exactly how a lot of this pans out. Of course, we don't see a great deal of movement during options expiration week as we've seen this week. In fact, it's been, since last October, since we've seen anything that rivals this. So it's darn near been a year. You get about 1 or 2 of these a year. Normally, you get some kind of setup and wind up. Very interesting to see the movement yesterday back up to 2094 or 2095 on the cash, and then back down 50 points in the matter of less than 24 hours is very interesting. But again, does that mean that we've broken out of the range that we're in? And so far, I'm kind of at a loss to explain a lot of how stuff is moving. I would have loved to seen the dollar index continue down and be down more than 33 cents today. Maybe that is some of the reason for the light volume in the GLD. Maybe it's the end of the summer. Maybe it's a lot of things. Maybe we're reading too much into a market like this. Market's been weak for a while. Maybe some big-time people on Wall Street just decided this was the time to start hammering the market with low volume and a lot of people away to get stuff going. Of course, the biggest movers in the indexes are the biggest high flyer, Netflix, and the rest. And even Disney today, after everybody downgrading it last week, found more people to throw rocks at it today. I think we talked about this earlier in the week. You had this gap open from about 94 to 99, And that gap came on about 32 million shares. Got 24 million today. But normally when you come down with this much volume, as we did on August 6th, of 57 million shares, you have a good opportunity to come back and start filling some of those gaps. And maybe it's as bad as everybody's thinking. I heard some discussions today about Disney and talking about how it was working out. And the thought that, we're getting into football season. How is that going to play out? Is that really going to turn things around for Disney and ESPN? It's kind of hard for me to believe that people are not going to be watching their football this fall. But maybe people are looking a year down the road or 2 years down the road with ESPN and some of the other issues. It's hard for me to not think that Star Wars is going to be, a $1 billion movie come this fall. But maybe that's not enough even to stop the hemorrhaging of something like an ESPN. But I do digress. When we were looking at Home Depot, I wanted to see whether this thing could stay up or if it was going to come back and fill the gap. Of course, we had a couple of these stocks that did break above higher. They're holding out a little bit better. But is this the sign of a stock market that's falling apart with Home Depot and a lot of the housing stocks? And right now, or at least so far, we've got some fairly infinitesimal volume on the downside for Home Depot. 3.2 million shares compared to the 11 million shares up we had just 2 days ago. But again, like I said, a lot of these stocks are coming back into the trading range on light volume. And it's kind of hard to see whether or not we have a market out here that could actually just see the wheels fall off. But normally you get all the volume on a Thursday during expiration, and Friday is fairly quiet. I expect that we're probably going to see a fairly quiet Friday. If there's a lot more to the downside to be had, I'm probably going to see it Monday, Tuesday. My guess is that they could bounce this maybe 20 points into the close tomorrow or by the close tomorrow. Maybe get back up to that 2070 that's acted as resistance or as support and now probably as resistance. But wouldn't be a big surprise to see a 20-point bounce in this market. It's been kind of like that for a while. Anyway, we're going to the break. You have plenty of time to give me a call at 877-227-6648. And you can email me at path@tfnn.com. And, of course, you can post a message in the den. Yeah. I just thought that we were going to probably close this week up a little higher with a little less activity, but there's always something exciting happening in the stock market. We'll get back to it after this commercial message.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crisp crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And I had a email asking me to look at Apple real quick. I don't think there's anything different than we talked about the last few days. And that I've said peak cell phone. Just the idea that margins are probably going to continue to be under pressure as long as we have companies like Verizon and T-Mobile kind of leading the charge to charging for phone upgrades. It's kind of 6 to 1 or half a dozen to the other, but I think it's the specter, just even the ghost of that happening, that has really put the whammy on Apple, along with Samsung's really showing that a lot of that high-end smartphone business, you get a fast car, and maybe you want a faster car, so you buy a more expensive one that got a bigger engine. And then you start having to build the engine on the car because, of course, it's not fast enough. But at some point, it costs you $5,000 to get a bigger engine and go 10 miles an hour faster. The next time you pay 20 grand and maybe you go 5 miles an hour faster. Next time you spend 50 grand and you go 2 miles an hour faster. And you get a lot of diminishing returns. The question is, as you spend more and more money on cell phones every year, is there a diminishing return point on having new features in these phones? Most of them are pretty fast. Most of them have very good screens now, whether it's Apple or Samsung. And the question is, on the high end, not on the low end, is that super phone part of that business just pretty much fulfilled, and we're on the downslope of the early adopters and the main part and the main crowd getting in. And from now on, it's probably lower and thinner margins. And my guess is that Samsung led Apple by probably about 9 months into this. And even Samsung's new phones, absolutely gorgeous. But the question is, how many people are going to pay that kind of money to upgrade if it's out of their own pocket and it's a lot more visible? It's kind of like the equivalent of the government making sure that you couldn't see where taxes were in your phone forever. And I think somebody in the Congress passed a bill that they had to be listed. Suddenly, everybody saw the Al Gore tax in their phone and figured out they were paying $15 a month for money to get funneled to somewhere else other than people really out there in ruralville getting phones. And, you know, for a while, of course, with dial-up phones, that was an issue. But as we continue to look back at Apple out here, the market's kind of weak. Volume's about what it was yesterday. Now, we are going up against this big spike down that kind of reversed out here just a few days ago, and that was on the 12th, 101 million shares. And again, 47 million shares. So it's not like this thing's going to fall off a cliff one day or even now. But my guess is that, like a lot of people looking at Disney, thinking that maybe compression is coming in to the margins and will be for a while. And they're going to have to give some kind of heads up more than just yet another phone. But my guess is this probably gets a little washed out. September 9th, I think, is the date that we see that they roll out their next new 6S. And at that point, I think it's a lot more interesting to look at that stock probably a couple of days before it. But they've got a giant PR machine, and there's just about nothing that they do that they can get out of it. Anyway, just a few things. Got a lot of stocks to look at. I had a big newsletter this morning. A lot of things that looked like they should have been setting up. And part of it was the American Airlines. I thought maybe that we would start seeing crude improve today because I thought American Airlines was in an ABC down. And the reason was that crude prices were increasing. Probably not so much, but we will see how the day ends for commodities. And this is Thursday, so we've got our friend Andy Heck coming on between 5 and 6 out there to talk commodities. So he'll have to figure out what's happening now. But anyway, to me, it just looked like, you know, with the crude coming down really significantly, you know, from that bottom out here, which really, I think, set the bottom in American Airlines. Does this give us a little taste that maybe crude prices have bottomed out, or at least maybe we're looking for a short squeeze in this before too long? We'll be back in a minute. Hopefully that answered your question, Tony. And you can all email me at path@tfnn.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And I got to tell you, I love my hate mail, but you got to do more than cut and paste to make it, or I'll have to put you on my ignore list. I expect at least a little bit of new information each time. You can, just can't call me the same thing each time. Just very boring. I think we expect more out of our listeners, even the ones who send nasty emails. So I know you're listening. You just can't quit. Anyway, we're going to look at some more stocks. Wanted to see how today Aaron's was doing. Of course, this is a stock that tends to be correlated to markets going down, tougher times, the rent-to-own business. This one, again, down on fairly light volume today. July 24th, we saw $39.06 with 2.4 million shares. Tried to break it on the 14th of this month, 700,000 shares, and it's been kind of going sideways on light volume. Not a big movement out here today either, but I thought maybe we'd see a little bit more, even in this bounce up on the 14th that gapped up. 700,000, what else is? Now, what else do we have out here? Century Aluminum, another one out here. A few of these stocks in commodities that I thought probably should be bottoming today on very light volume. At least aluminum out here is probably at least once. August 7th came down on pretty hard volume of 14 million shares. Been going kind of sideways here on light volume. A little under 3 million shares yesterday. 1.8, let's call it 1.9 million shares so far today out here. So a lot of these may be finding at least a temporary bottom. And I thought maybe we might see a little bit of that today with gold moving, and maybe it was moving ahead of maybe some of these other commodities and making a bottom, but no such luck out here today. Harmony. Let's take a quick look at this one because I was looking at this one. Now, this one actually had higher volume than the previous low too. Didn't quite hit the previous low of August 4th. That had 1.3 million shares. Yesterday it had 1.8 million shares, a little bounce out here today. It has picked up a little steam from yesterday. I like the energy that Harmony had on the way back down from this August 12th high back down to yesterday's low. It wasn't, didn't really pick up or didn't really say a lot of things. You just had 2 or 3 days out here. But at least you're picking up a little bit of volume in this one today. I don't think it's the strongest horse in the barn, but it does look like it had a nice bounce out here today. Other stocks that seem to be rather interesting to me have been ones that are breaking down. IMAX, which seems kind of like movies have been a big thing. And I thought, well, this is going to be interesting to see how some of these stocks, if you remember a couple of weeks ago, we were talking about how a lot of the energy stocks had hit their lows with a lighter volume and continued down. And this is kind of in that pattern out here. This thing gapped up with some decent volume going back to the 6th of April. Yeah, 6th of April. Wasn't huge volume, 1.5 million shares. Came down, tagged it with 3 million shares, bounced, came back down. It's been fairly light volume. Even yesterday, 500,000 shares with a little doji, but today it pounded right through the gap and a consolidation level that has been around for a while. You've got some nice days where this is going up against it on lighter volume. But as it was a couple of weeks ago, as it is today. As I said, I was looking to see maybe whether or not higher fuel prices were in line by looking at the airlines. Another one that I'd looked at and thought maybe we were looking for a top in, or at least a short-term bottom in crude, was JetBlue. This one had tested its July 23rd high, $24.19, with 7 million shares. It went through it, closed below it, a little doji yesterday, and a clip down on this today. But again, the volume is fairly tepid, 4.25 million shares on it today. And I don't know if that's because of it's a low-price leader out there, but interesting. Some of these oil companies also, like I said, looking for higher volume. Legacy Reserves yesterday actually did have some light volume compared to its previous low. This symbol on it is LGCY, if you're not familiar with it. But it was had an 840,000 share day, tested yesterday by 330,000 shares. Volume is picking up, though, as it is breaking through those previous lows, too. LNG, it looks like none of these stocks are being spared today. A little lighter volume, but not enough. Cheniere LNG was had a nice low out here at $31.31, 3.2 million shares going up against it with 2.7 million shares already. My guess is that we will catch that level before the end of the day, so you will probably be breaking that with higher volume by the end of the day. So we'll continue with that. Well, at least he's switched. Now my hate mail is about my sentence structure. So I am feeling a little bit better out here. Just keeping you guys up to my one hate mailer. Anyway, that was one. What else do we have out here? OIH this kind of looked rather interesting to me today. It is continuing down. Volume a little lighter out here today. I did think that this really hasn't busted the previous low with significant volume from that March 16th low at $31.51. It's been kind of in that range, but very light volume the last 3 or 4 days, but doesn't seem to be helping it out any either. Qualcomm, another one that was at lows. Wanted to see how this thing was doing. It had broken several of those lately. Now, the one I was looking at was the $61.48 low of July 7th. Got into it with higher volume on the 23rd of July, so we knew that was going to get retested. That volume was 37 million shares. It's gone below, what was the low of the day there? 83. It's gone below that by about 50 cents today. But you've got 38 million shares up against 8 million shares in Qualcomm out here. But again, hanging at those lows. We're at 2045 on the S&P cash, and doesn't look like any selling is abating. 2.56 billion shares on the cash. So what else do we have out here? Ryland. Ryland Group, we were talking about this the other day. 820,000 shares, 870,000 shares a couple of days ago. So just a little bit more volume. We've been talking about how volume had been up here. Man, not that much volume, but it's back in the trading range once again, RYL. And what else do we have out here? Volume hadn't picked up either on this today. 239,000 shares. So some of these stocks up here at these highs, not doing a lot. I think after the bell tonight is Yoku. Or was that last night? I'll have to check quickly. Headlines. Real quick. I think that was last night. Yeah, I think it's earnings after night, it shows. Volume has picked up. It's broken through the $17.74 low of July 8th. You had 5.1 million shares. You got 4.4 million shares so far, but earnings, like I said, after the bell. Also, another one, Zinc Horsehead Holdings, another commodity stock out here that looked fairly light. Now, this one's also down on light volume. Last major low out here was at $7.80. That was July 28th. So we're down to $7.49 with 5,000 shares. You had a huge gap down that really set the downside in motion on the zinc. This is the July 6th low at 833 with 4.7 million shares. Volume has been rather light since then. It's been going off and down, but again, a lot of these stocks just continuing to drift down on lighter volume. So we looked at a lot of stocks out here. You can always give me a call at 877-927-6648. You can email me at path@tfnn.com. And, of course, you can always post a message in the den. What are we looking at? 2044, 2045 on the S&P cash. We looked at Ryland. Let's look at Lowe's. It's yesterday's earnings. A lot of people were talking this down compared to Home Depot and its earnings. Did have some decent volume yesterday compared to its previous high, which was May 12th, $83.93. 3.8 million shares to 11 million shares yesterday, but back into the trading range. Energy was about the same from that May 12th high down to the low of July 7th as it was back up. So a lot of these not giving a lot of clues. The market seems to be moving much more indicatively than a lot of these stocks, these selves. Yeah. And Jay in the den is saying NASDAQ 10-to-1 downside, NYSE 5-to-1 downside. Some fairly significant numbers out there for movement. Let's take a look at some others. I wanted to see how IBM has done. Not a lot of volume in IBM. This March 13th low had been kind of support for the last, 4 or 5 days, March 13th. 153.40. And, you went through it with 4.2 million shares yesterday. The volume picked up slightly. Today, 2.3 million shares. Of course, you've always got William Buffett out there to, not the singer, not the margarita folks, but the other folks that want to come back to Omaha. And you never know when he's going to come in and decide to buy some more. He's the kind of guy that will probably continue to buy for several years. But let's go back and look just a little longer on IBM out here. This looks to me like this could continue to drift down like a lot of these stocks. The last major low that this thing probably would be headed for is the January 29th low, $149.52. That has an 8.3 million share day low, and it has been untested. So what do you got, $3 down to that? $2.98. Probably wouldn't be moving that much. That, but yeah, you got about $3 more to test that low. And what do you have beyond that? Wow. I think that's, you got to go way back here. So, well, you've got a gap at about 142 and maybe some congestion area at that. And then the next major move down would be about 125. So, going to be watching over the next few weeks that, or even maybe the next few days, that 149.52 level on IBM. And 2043.83 on the S&P cash, 2.6 billion shares. Volume's been light. Again, you get that last 30 minutes where most of the volume comes from that really sets the tone of the day. So we'll be continuing to watch that. But we'll see. And wanted to look at AMAT. And this one, I've been waiting for it to come back into the day that this thing gapped up fairly strongly. That was back to the September 24th, 2013 gap up that had almost 89 million shares. It's back in that today. And you got, about 8.2 million shares. So it's hard for me to see a lot of these stocks continuing down. But again, we've seen enough of these things hit levels of support and then continue to kind of drip, drip, drip all the way back down. Anyway, we've got one more segment. And of course, after this show for the next 2 hours is the Tom O'Brien Show. Congratulations on his call on gold and on the dollar. And what we will be looking at after that, is Andy Heck in the 5 to 6 hour for commodities. But we'll be back right after this commercial break.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Danger, Will Robinson. Danger.
I think we've got a little danger out here in this market. 2044 on the S&P cash. We're down to 2042. Volume 2.67 billion shares. Again, kind of light going into the 3 o'clock hour. I'd like to see 4.2, maybe 4.5 in the consolidated tape by the end of the day to really signal that we've blown out of this trading range that we've been in for so long. In fact, we were talking about it last week that this is the narrowest trading range in over 100 years by a percentage. And it's been quite a while. Eventually, it had to break out one way or the other. Kind of interesting that it did so during an expiration week. Normally, they try to keep things nice and flat. But a lot of people are away. Maybe this was the time to do it. But what else do we have out here? I wanted to look at a few other stocks. SKYS. if I did it right. What is it? Skyworks Solution, SKWS? SWKS? Yeah, there it is. We've been talking about Apple earlier. And it certainly looks like, we talked probably, maybe 2 weeks ago or 3 weeks ago, I think, on a Friday on Tom's show. And I said, well, Apple was going to 115. It pretty much broke fairly quickly, mostly because I'd been looking at a lot of these stocks. Very tough to find a position to get in these things because they were moving so quickly. And I didn't short them, but they certainly looked fairly weak at the time. And that's one of the reasons why I thought it was going to 115. Well, it's at 112.75 now. It got down to 109. But again, the little lighter volume out here, you wanted probably something in the range of 13 million shares as it broke these lows. And today we've got kind of a lighter volume out here, 4 million shares. And of course, we're getting kind of toward the end of the summer, everything else. So maybe we're going to make just a little extra lows before these things bounce. Doesn't mean they're going back up to the highs. They could just go sideways or just gain enough energy after they bounce off these low moves. Or maybe we get volume coming in tomorrow. But if we continue to see kind of some light volume moves down here, probably look for a pop back into the trading range. In this case, it would be above the $88 level. But on the days like this with a huge movement in the markets, I would like to see just a little bit more volume in some of these stocks. Again, maybe it happens before the end of the day. I don't know if we're near a bounce. A lot of times when ugly things happen like this and you don't get a lot of bounces during the day, there's something else going on that I do not know about, that I haven't put together. The market's been weak. We've known that, but it's been weak for 6 months. And the question is there something different out now? Did it just break because of something different? Maybe everybody figuring the Fed couldn't raise rates, the psychological part of it. Was it all technical? And right now, it's I don't have a lot of answers other than the fact that probably time to think a lot more. I got one question out here, and that is there is a buy point in soon. And I think a lot of people have been talking about this today on Financial Infotainment TV, the cable stations. Maybe a bottom. I don't know if there's, I've been pretty bearish on these solar stocks. As you know, I don't see a whole lot. Fed between a rock and a hard place is a good commentary in the den. In the meantime, sell when you can, like before today. And we'll see you tomorrow. Same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.